Before we start, a quick note. These views are based on market performance hypothesis. As per current conditions, investing involves risk to your capital. So it is vital that you do your own research as well. Welcome to the final episode of our 2026 Outlook series. We have spent last 3 days analyzing the time correction, the macro shifts and the specific stocks. But today, this is where the rubber meets the road. The importance of executing this strategy right is the difference between a portfolio that thrives and the one that barely survives. A great map is useless if you don't know how to drive. Today I'm driving you the 2026 Master Blueprint, the strategy for entry, allocation, and the most ignored skill in investing, knowing when to exit. The biggest mistake investors make during a recovery is lump sum FOMO. In 2026, we avoid that. We use a 3-step ladder. 30% now. Establish your position. You need skin in the game to stay focused. 40% on dips. Use the inevitable volatility of Q1 to build your core. This is your value tranche. And 30% on confirmation. Around April or May, once we see the full year results and verified order books execution, you deploy the rest. Let's now talk about how you divide your capital. You need a balance between aggressive alpha and core stabilities. 15% in Zen Technologies. This is your engine, high growth and high octane. 30% in Mahindra and Mahindra. This is your chassis, the strength of the rural economy. 20% in VRL Logistics. This is your turbo, capturing India's new infrastructure efficiency. And 15% in Dhanuka Agritech. These are your brakes, debt-free and steady. The remaining 20% in FMCG, Dabur or HUL or both. This is your fuel, consistent dividends and a safety net. Now the most important of all, the exit strategy. On Google Maps, you need to know where to stop. In 2026, watch out for these red flags. Zen Technologies. If the forward PE crosses 65x without the order book doubling, take half of your profits. VRL Logistics. Watch the operating margins. If they hit 22%, the efficiency gains are likely fully priced in. The 2025 time correction was a test of your character. It filtered out the gamblers and left the floor to the disciplined investors. But why should you trust this roadmap? Because grounded, profit-making hypotheses are what we do here. Remember our past calls? On Vikram Solar, we said don't chase the IPO high. Buy below 300. Today it sits at 240. On Tesla, we gave the green light at 324. It is now at an all-time high. For Urban Company, we said wait for the price to drop. It is now 40% down. With Tata Capital, we called the IPO fair value. It is 10% up. And for LG IPO, we advised waiting for the hype to settle. The price has dropped from 1700 at listing to 1500 today. Consistency comes from ignoring the noise and following the idea. Tune in regularly as we explore these grounded strategies. It has been a privilege being your thought partner. As you head into the new year, remember the market rewards the prepared. So Merry Christmas to you and your families. Let's make 2026 the year of the disciplined trader. Subscribe now if you like this content and let's win the next cycle together. Thank you for tuning in.